Welcome back to Tech Unpacked, the podcast where we dive deep into the tech news that's truly shaping our world. I'm Mark, and with me, as always, is the ever-curious Jenny, ready to unravel some complex narratives today.
And I'm Jenny, Mark, and you know I love a good puzzle. Because what we're talking about today, it's not just big, it's... well, for lack of a better word, it's quite something. It's a seismic shift, really, in the tech landscape.
A seismic shift is right, Jenny. Today, we're talking about NVIDIA. You know, the company that's essentially the bedrock of the GPU world? Well, they've done it again. But this time, it's on a whole different scale. Get ready for this. In Q1 of 2025, NVIDIA captured a significant 92% of the discrete GPU market share. Let that sink in for a moment. 92%.
92%. Mark, that's not just dominance. It's an almost complete takeover. To put that in perspective, AMD, their closest rival, saw their share drop to just 8%. And poor Intel? They were at 0%. It's a remarkable, if not concerning, turn of events.
It's the largest quarterly market shift in GPU history, Jenny. John Petty Research, a firm that's been tracking this industry for decades, confirmed it. NVIDIA shipped around 8.46 million units, while AMD managed a mere 736,000. And here's the kicker. AMD was reportedly experiencing considerable demand for their new RDNA 4 cards. So how does considerable demand translate to fewer than a million units shipped?
That's exactly what I'm trying to wrap my head around, Mark. How can you have such strong demand but seemingly no product to sell? And this brings us to what many are calling the strategic, if controversial, part of NVIDIA's approach. The scarcity playbook. It appears they intentionally limited the availability of their high-demand RTX 5060 Ti cards. TechSpot even critiqued the RTX 50 series as NVIDIA's weakest offering yet, due to its questionable value proposition.
It's definitely a calculated move, Jenny. Why sell a GPU at its suggested retail price when you can engineer a scarcity that allows retailers to mark it up by, say, 300%? We saw reports of the 16 gigabytes RTX 5060 Tis selling for prices that just defied logic, simply because it was nowhere to be found. It's shrewd, but it's also quite challenging for consumers, and it really put AMD in a tough spot. They couldn't capitalize on their more competitively priced cards because they simply didn't have enough product available.
So it's not only about what NVIDIA managed to sell, but also what they effectively prevented others from selling. But here's the central question for me, Mark. How did NVIDIA acquire this kind of leverage, this power to control supply so extensively? What's their core advantage in this scenario?
This is the intriguing part. Or perhaps, depending on your view, the slightly concerning part. Their advantage, their primary leverage, is their incredibly profitable AI business. Take NVIDIA's AI chip division, especially products like their Blackwell series. They're generating billions. We're talking $11 billion in Q1 alone. That kind of revenue provides them with immense influence over TSMC, Taiwan Semiconductor Manufacturing Company, which is where nearly all these advanced chips are fabricated.
Okay, so their AI profits essentially grant them priority access to the production lines at the world's most critical chip foundry? Is that what you're suggesting?
Precisely. They secured approximately 70% of TSMC's most advanced wafer capacity. AMD, on the other hand, had to allocate their resources between CPU and GPU production, leaving them with roughly 30%. John Petty himself highlighted that NVIDIA could commit 100% of its allocation to GPUs, thanks to their AI earnings. So while AMD had significant demand, they couldn't get the chips produced, because NVIDIA had, in essence, secured them all. Their gaming GPU production is effectively bolstered, almost entirely, by their AI segment.
That's a new level of strategic integration? Or perhaps cross-subsidization? It's almost like their gaming GPUs are a way to maintain brand visibility, while their AI chips bring in the substantial revenue and dominate manufacturing allocation. But Mark, when one company controls 92% of *anything, doesn't that bring up some serious questions? Like, regulatory scrutiny?
It certainly does, Jenny. We're looking at a significant regulatory threshold here. In the EU, if a company maintains an 80% market share, it frequently triggers investigations into potential anti-competitive practices. MIT economists are already raising concerns, indicating that NVIDIA could face fines upwards of $40 billion if their business practices are deemed anti-competitive.
$40 billion? That's substantial. Are we witnessing a replay of the Intel situation? I recall back in 2009, Intel faced a $1 billion EU penalty for anti-competitive behavior. Is history repeating itself, but this time on a far grander scale?
The parallels are quite apparent. The core question is, how quickly will regulators intervene? Because if the situation remains unchanged, their market share could climb to 95% or even higher. At that point, is it truly a competitive market, or more akin to NVIDIA operating its own private shop?
And what does that imply for us, the consumers, Mark? If a single company wields that much control, what happens to the pace of innovation? What about pricing structures?
That's a critical concern. Without genuine competition, NVIDIA has less incentive to push the boundaries of innovation as aggressively or to lower prices. Why would they, when they have a manufacturing advantage and a seemingly unlimited source of AI revenue to reinforce their position? The price and availability of your next GPU could be determined by AI chip profits, rather than by what gamers actually need or can realistically afford.
It paints a somewhat stark outlook for the future of the GPU market, at least outside of NVIDIA's spheres. So, to summarize, Mark, it seems NVIDIA's dominance isn't just about crafting superior cards, but about strategically outmaneuvering, outproducing, and outleveraging their competitors in ways we haven't seen before, all thanks to the AI explosion.
Exactly. It's a strategic maneuver, but one that could draw considerable regulatory attention. We'll be monitoring closely to observe if regulators step in, and how this unfolds for the future of both gaming and AI. An incredibly compelling, though somewhat troubling, period for the tech world.
Indeed. It's a compelling blend of innovation, market dynamics, and ethical considerations. That wraps up our discussion for today on Tech Unpacked. Thank you for tuning in.
And thank you for listening. We'll return next time with more tech insights that truly resonate. Stay curious, everyone.